Hello and welcome to Fintech Insider. Today we have a bit of a special episode for you today. We're going to be talking to Jeremy Balkin, who is the Global Head of Innovation and Corporate Development at JP Morgan Payments. How's it going? Great for you to join. I mean, join is like literally joining us as well. Like we're in the same place. This is the first interview we've done for, I think, like 18 months, Laura.
Wow.
Weird. Face to face. This is
and it's only slightly better than when we first met in New York, pre-pandemic, about 25 years ago.
It does feel like that, doesn't it? It's kind of weird.
But it's great to be here, and thanks for the opportunity. It was a bit jet-lagged flying in this morning, but I did see the sun this morning, and as a proud Australian, I can tell my friends back home who are listening that the sun did shine in London today.
It happens like twice a year, but so what brings you to London?
So I'm here en route to Dublin. I'm speaking at a client event tomorrow in Treasury. All of a sudden, payments are sexy, no longer sleepy and boring. And obviously stopping on the way here to see you and a few other folks and some clients. It's a busy week, and then I'm off to Middle East over the weekend for something over in Abu Dhabi, and then back just in time for Thanksgiving, the American day where families get together. So it's a big week on the road.
Wow, you're racking up those air miles suddenly as well. Like, I've been worried about that while the pandemic's been happening. Like, all my air miles are going to expire. You know what I mean? Like, so actually, just a little bit of a top up in these trips. It's good.
Yeah, it's that time of year. Got to get a lot done before the end of the year. So glad we can do it. Glad we can see you, and a lot of fun today.
Very cool. Well, I mean, on today's show, what we're going to be doing is talking a little bit about your background, your career, and actually a bit of a deep dive into the report that you guys put out, which is all about payments eating the world. I mean, there's so much in that we can kind of unpack. But maybe if we start off a little bit with you, tell us a little bit more about your role at JPM, because it's a fascinating one, and you guys are big players in this space in terms of not only payments but much broader than that. But let's start a little bit with about what got you to here. I mean, when I first met you, like say in New York, you were at a different organization, but take us further back than that. Like, how did you get into banking?
Sure. Well, so born in Australia. My parents are from Southern Africa, so first generation Australian. I've always been an intrapreneur or an entrepreneur within financial services, and started my first, I guess you could call it a fintech business before there even was a term fintech in Australia. And then I remember my father, who was a McKinsey lifer, God bless him, gave me some advice. He said, Jeremy, you're an idiot. Go work for Macquarie Bank. Don't do this. And of course, 5 years later, I ended up going to Macquarie Bank after starting this fintech from scratch.
I mean, we always think we're not going to do the thing our dad said, didn't they? But it turns out that way.
And then, I survived an extreme sports injury in 2008 that changed my life just in the aftermath of Lehman Brothers. So between sort of one's livelihood and then, of course, one's health in flux at the same time, I sort of took the opportunity with the second chance that I was given to wanted to be a different person and a different professional. And candidly, with the world in the state that it was in post Lehman's, if you wanted to have a, dare I say, a small positive, even potentially incrementally positive impact on an industry that had lost its way, you had to come to New York. You couldn't do that from Sydney. So I came to America in 2013. I didn't know anyone. I came with a half-empty bag, and I'm a positive person, but the bag was literally half empty. And it's been almost a decade there, and it's been an awesome journey, and leading innovation now at the second place at scale. This time, obviously, JP Morgan, we're the leader in payments. And if you think about payments, historically been sleepy. Now it's arguably the sexiest part of financial services, and it's also the part of the financial services you can have the greatest positive impact, because if you can move capital efficiently in the economy, especially as we've seen over the last couple of years, the power of that, you can touch people's lives in a real way. If you can move, if you can be the difference between a payment being received today or tomorrow, that could be life or death for a small business or for an individual. It's so important, and I think that's the mission we're on. It's day one.
Amazing. I mean, you touched on it very briefly, but I mean, if you don't mind talking about it, I'd love to kind of unpack slightly. Like you said, you had a extreme sports major injury. Like, I mean, I hurt my knee playing basketball. That doesn't sound anywhere near as dramatic, but tell us a little bit more about that, because I mean, those types of things sort of shape your outlook on life.
Yeah, I mean, love basketball, but it wasn't basketball. When I was, my first major injury was a rugby injury, and I smashed my leg up. I got 2 screws there. Then later in life, I snapped my arm in half, hanging off a rope. We used to do this sort of military climbing off a cliff, just your upper body on the rope. And of course, there were probably like 12 ex-special forces guys and then the finance guy. And I mean, you probably could have seen the outcome already. And, it was the 26th of December, 2008. And, my arm just snapped on the top of the rope. It was really at the top. So it was like a 50-foot drop. And my humerus, and it wasn't funny, but this is called your humerus bone, literally snapped. And so now I think it's a 18 centimeter plate and 14 screws. My wife would argue now that there's a screw loose, but it's not in there. And, with the second chance that I was given, I was very lucky, when I woke up in the hospital 2 days afterwards, and the surgeon, said to me, Jeremy, you're a very, very lucky young man. And, when your life's going through these existential moments, notwithstanding that Lehman Brothers had collapsed 2 months earlier, and we all thought the world was going to end, especially if you're in financial services, it gave me pause for the type of person and professional that I wanted to be, because I was given this second chance. And one thing you learn in life is, you don't know when it's going to end. And so because I was given a second chance for when it was going to end, I still don't know when it will end. I hope it's a long way away, but I didn't want to waste any moment. And one thing I also learned, which has very much driven me since then, is the concept of time and how valuable. You can sell it, you can never buy it. And so I don't want to waste a second of my life, personally or professionally. That's why I'm on this mission. And I think also we're in a world where time is a premium now, and with technology, with fintech, with expectation, with millennial preferences that have shifted and reshaped almost every industry, time is such a premium, and people have finally realized that, which is great. But philosophically, that's what's been driven me since recovery and the last, 2008? So what are we now? 21. So it's almost 14 years since, and it's been. I'm very lucky for giving the second chance.
Yeah. I mean, those things really stick with you. As I was saying, the sort of recovery around that.
Yeah.
I mean, getting back on your feet, going through all that physio, kind of getting back to doing things. I guess you're not, climbing ropes anymore to avoid those types of injuries. But so do you beep when you go through an airport as well? Like my pin.
It's funny. It's funny because a lot of my mates would say, you're going to beep when you go through. It only happened once. It was the first trip after this. I'm a huge Manchester United fan. Hopefully no one holds it against me. And I was flying. It was May of 2009 when we were in the Champions League final in Rome. And being the diehard sportsman, I literally flew to Rome for a day for the final. And of course we lost and we didn't play with a striker. And Sir Alex Ferguson, you're a great guy, but what were you doing that day? but literally went through security in Rome. And I was I had a backpack. I didn't have, I was there for the game. And you could see this massive scar. It was pretty fresh. And they're beeping me and they're taking out the hand scanner. And I'm like, dude, it's here. This is what it is. And I literally had to strip down. It was the most embarrassingly stupid thing. But, it is what it is. And it only happened once, thankfully.
I mean, it's good story for the kids and everything as well.
Well, I would have rather us won, frankly. But, a different story for another day.
Indeed.
Although I did love the Fintech and Football podcast, which I did listen on the plane overnight. So, if you're going to do that next year, please let me know, just in case you need an intern for the day.
Definitely. I mean, all of these things you love converging. It's great. And speaking of things you love, obviously payments. You touch on the impact that it has globally on people's lives. This isn't just moving money around. This is facilitating economies globally, isn't it? So, I mean, how do you think? And I guess zooming in a little bit on the report. I mean, how has payments suddenly got so sexy? Like, actually, what's happened there? Because if you literally just took it as money moving around the world, well, that's not that interesting. But actually now it's facilitating everything that we do, isn't it? Every sort of walk of life. So what's happened?
Well, David, I think you nailed it. I mean, historically, when we think of a payment, we think of essentially taking a piece of paper from someone's wallet physically to another. Over time, what's happened is what actually is a payment. A payment is an exchange of value, or a transfer of value, or a transfer of data, because we're now in a digital world. So when you think about what a payment actually is and how it's evolved into the world we live in right now, exchange of data and exchange of value is what everybody does instinctively. So this is the era of payments. If you think about in 2007, the beloved iPhone came out, right? So 10 years later, in 2016, there were 3.67 billion smartphone subscriptions in the world. By 2026, another 10 years after that, 91% of the world is going to have a smartphone. What we've created over the last, call it decade or so, is as we've connected people through technology, through the internet, through mobile, we create these vertical platforms. Now, when we've created these platforms, these ecosystems, it's about connecting each other. And so we've gone from connecting people to connecting platforms. So when you connect platforms, you exchange data horizontally, vertically, 360 degrees, and that's what a payment is. And that's why we absolutely think this is the era of payments. But you actually, in the premise of your question, is an important one. You said, what's happened? Over the last, again, decade, there's been 1.5 trillion with a T of investments across all things fintech, M&A investment over the last decade. 1.5 trillion with a T. I mean, it's staggering amounts of money. What's come out of that? the biggest fintechs of the world are all payments companies.
Yeah.
In addition, another data point that's interesting, and sorry if anyone missed the boat on this, but over the last, again, sort of call it 2009 to 2020, there was, of total shareholder return of publicly listed companies, payment companies compounded at about 25%, massively exceeding asset management, investment banking, consumer banking. So as a sector, it's just performed phenomenally well. I would argue it's a sleeping giant. It's gone from literally being sleepy to arguably the sexiest, most exciting part of financial services, driven by technology, driven by mobile connectivity, and driven by this platformization of the economy.
Yeah.
And that's why it's the most exciting space to be in.
It's fascinating, isn't it? As you say, it's moved from just a rail.
Yeah.
And as you describe it, this isn't, if you'd asked somebody 30 years ago what a payment was, it was movement of money. And now, to your point, it's movement of data, isn't it?
That's it.
Money is by nature digital
100%.
these days. And that's not just cryptocurrency, it's normal currency. It's a one or a zero or a factor of that to actually move something from A to B. So
and can I just say, this is an important little fact for folks out there, and it's something I learned in the process of authoring or co-authoring Payments Reading the World, which is, the first sort of paper money came out in China, and I think it was about the 1100s. It took about another 700 years, so call it the early 1800s, to have the first known physical wallet, right? Then it took another 200 years to get to essentially digital wallet, 99, PayPal. And then it took about 15 years, so call it 2014, 2015 with the Apple Pay, Samsung Pay, to get to the mobile wallet. And now we're looking at central bank digital currencies. I mean, it's amazing the speed of which this innovation is happening in payments. And I think it's better for the consumer, it's better for the end user, for the enterprise, for the small business. And to me, this just rapid innovation is not getting slower. It's only getting faster. And you think about what's the second and third order effect going to be for the downstream economy, especially the new economy post-pandemic, which we want the world to grow. We want equitable distribution of payment flows and wealth creation and opportunity, especially for younger people. I think it's an exciting future. But it's powered by payments, because in many ways, payments is the core of it. And then you have value-added services layered on top, which almost every business today is a payments business at its core.
Well, that's something that I sort of read in that report that you said, is like every business is a payments business. So what do you mean by that? Because obviously that's not that every business is going to make its money from payments necessarily, but do you mean that it's sort of a major part of the facilitation of the business, I guess, even existing, right? Businesses exist to sell things, don't they?
Yeah, no business, whether a small business or a large enterprise merchant, would be able to exist if they can't either pay or be paid, fundamentally. And I think the technology has enabled that in ways like never before, where entire new business models and ecosystems, you could argue, have been created based upon the ability for payments to be at the core, and then you layer these value-added services on top, to the extent that we would argue that every business is a payment business. Think about just the last couple of years with the pandemic. There was some previously business to business or enterprise business models where they had to go direct to consumer to be paid.
Yeah.
And that was a fundamental shift. And you've seen, I think it's in Europe, can I say the UK is part of Europe for the purpose of argument? I'm not going to offend anyone.
Geographically, yeah.
But if you look at across Europe in 2020, digital financial services adoption, dare I say fintech, up 72%. In the US, 39%. You look at the role that digital financial adoption, fintech in the developing world, 6% of GDP by 2025. They're not cyclical. These are structural shifts in how we do business, enabled by the payment, first and foremost. You look at the rise of super apps in China, for example, and the super app is coming to the West faster than people even realize. But at the core is the ability to send and receive payments. And that's what's so exciting.
Fantastic. Well, I mean, this is something that obviously, you guys, JP Morgan, are very familiar with. You're not a commentator just in this sense in terms of actually everything that's happened. So talk to us a little bit more about what you guys are doing in this space, because I read the headlines and see different things that are sort of coming out. But there's 3 or 4 of them that stand out as you guys are really putting your money where your mouth is in terms of the industry, right?
Yeah. And I think the way I think about JP Morgan is to payments what AWS is to the cloud and the internet. We move, I think, something like $8 trillion a day.
Wow. 1
in 4 of every US dollar that moves around the world goes through our payment rails. We're supporting clients all over the world. We're growing, very ambitiously around the world. Historically, JP Morgan has been viewed as a US firm, and rightly so. And when JP Morgan came knocking, for me, it was irresistible. And part of what was asked of me was to look globally at how we could expand. Payments is scalable and there's no borders. So how could we grow our footprint? How could we work with technology, payment tech, fintech, and otherwise outside of US? And to me, that's where the opportunity. I would argue that's where the most opportunities lie, because we're in a global world now. And in fact, you could argue the technology coming out of parts of this part of the world, out of East Asia, out of even East Africa, Central Eastern Europe, dare I say Australia, is really, really exciting. And part of the challenge, because we're in a borderless technological world, is oftentimes those entrepreneurs, the second market outside of their home market they want to conquer is either the US or come to London or the UK next. So there's a natural synergy across the corridors. And again, facilitated by payments is how we can help them.
Fantastic. So touching on the report that you guys wrote, I mean, I read it and I said to you before we started recording on this, it did the rounds at 11FS and everybody thought it was great. I mean, it reads...
Well, Richards did the rounds with us. So,
did it? Well,
and you beat us by 2 weeks. So
we could keep swapping. It's good. But it reads like a love letter to me. Like, actually, this is people who are passionate about the industry and passionate about the subject matter writing something that they love. And that's fantastic. That's what... I think your point earlier on around the exciting thing about the industry is, and that exponential change of new innovations coming to the market. It's just such a great time to be doing this, isn't it? In terms of working in this space and doing the things that we do. But tell us a little bit more about why is payments eating the world then?
Sure. If I can take a step back about why we decided to even author it. I joined JP Morgan the 1st of March of this year, and I remember sitting down having lunch with our head of payments, our boss Tarkus, who's a total rock star, can-do attitude, wants to get things done, doesn't see barriers. And I remember he said to me, Jeremy, our binding constraint is not resources here, it's ambition. It's a scale of the ambition. And it was absolutely true. And so I remember saying to him, we had lunch sort of week 2 or week 3 on a Friday, and I said, why is it that all these consulting companies and wannabe payments companies have a payments report? We're the leader in payments. Why don't we have a view? And he said, I agree. And he said, go write it. And, it was busy enough just trying to get my badge to work and the email to work and meet the new colleagues and all that sort of stuff. And, I've got an outstanding co-author, Neha, who's just an absolute superstar. She and I were brainstorming on different themes and different ideas. And I mentioned to her this sort of side hustle project that I wanted to get started, and she believed in it. We co-authored it together over the summer. I mean, it's been a chaotic, but in a good way, extremely busy 7 or 8 months with the work we're doing. But this was a side hustle project. And, as we thought about what is our vision for not only for the future, what do we believe today? We wanted to send a signal to the marketplace. This is what we believe, because firms like us don't often do that. And we wanted to take a very proactive and pragmatic view of where we think the future of our industry is heading, how we're supporting our clients, but sort of tangentially to that, the biggest impact has actually been the cultural impact. When all of a sudden you've got folks across the world reaching out, sending emails saying, hey, I didn't realize we're so forward thinking and we've got this view, and hey, can I join your team? I've had folks from bunch of competitors who you think that these fintechs reaching out saying, hey, I didn't realize a bank thinks like this. Wow, can we talk? The cultural dividend, I think, has been really, really important, but so too has been the quality of the deal flow. Because again, who are the folks we want to deal with and work with, potentially invest in, potentially acquire, support their growth? Again, wouldn't necessarily think of a bank in this way, but of course we're at the payments part of the bank. We're the forward-thinking part of the bank, and it's been really amazing to see the positive inbound of it, David. And candidly, I would say going further, when we thought about what we should name this report, I just had this weekend thought. I was on the bike and I thought, what about payments eating the world? Nah, it's insane. And I suggested it to Neha, and I just saw her visceral reaction. And I thought, wait, that's not bad. That hits. So then I had a meeting with our CMO, who's also new to JP Morgan, who's awesome, and he threw his full weight of support behind what we did. And we were on a Zoom. I remember I was in Houston, and I'm on the phone on Zoom with Dustin, our CMO, and he's like, "What do you want to name it?" And I've got holding the phone like this. And I go, "Payments Reading the World," and he nearly jumped out of the phone. And I'm like, "Wow, 2 for 2 here." And then we just named it that, and we obviously had to keep it a secret because you can imagine it could become a quote in its own right. If someone else said it, would blow the whole thing up. And remarkably, it was kept a secret until launch, and it's been really humbling because here's the thing. we believe that, as I said earlier, we've just gone through this era of connectivity. We've connected people to create vertical platforms. Now platforms want to talk to each other. It's interoperability, it's API, it's exchange of data, it's exchange of value. It's the era for payments. And so therefore, we think there are, in 2020, there was 240 trillion with a T of global payment flows. We think that this acronym of Power Plus represents 54 trillion of those payment flows in 2020. They are the highest growth, most innovative, deepest value pools, where we think there are sort of 20 sub-themes or value-added services along the Power Plus acronym, which stands for platforms, online wallets, embedded in real time. And of course, these themes shouldn't surprise anyone, but what I wanted to do when we created this was to make it bite-sized. Like if you think payments, it's often hard to explain. It's hard to conceptualize because it's invisible.
Yeah.
Unless it's physical, of course, but we're moving into a digital world.
Well, and often it's a regulatory acronym or it's a, PSD2 or ISO, whatever. And actually, something that people can actually remember off the back of it, I think is, and that's what really stood out in, like say in the 11FS Slack was like, cool, the power thing totally makes sense, and actually everybody can remember what each of those things stands for, and it's a conversation point, isn't it? Because I'm sure you guys are standing up and doing presentations about these things. You've got like an hour of presentation right there, just in terms of unpacking what power actually means, haven't you?
Yeah, and we wanted to make it bite-sized. We wanted to make it that any frontline, any client relationship manager or any frontline staff or even in the C-suite could have a narrative that rolled off the tongue, that was simple. Because again, payments can be complex or historically has been complex in the way it's been framed. Now payments is sexy. Let's make it bite-sized. Let's make it consumable. Let's make it at scale that people can talk about this in a way, because when you start demystifying the complexity of it and then you start thinking about these new ecosystems like wallets on wheels or connected cars, for example. We just did a big investment here in Europe on that with VW Pay. You think about the modern day vehicle. The car as we knew it has 5 kilometers of wiring in the car. There's like 100 million lines of code in the car. There's the power of 20 PCs, 25 gigabytes per hour of data that's processed. By 2030, there's going to be 95% of the cars on the road will be connected cars. We think of that as a wallet on wheels. You think about, but again, it only becomes that when you can enable the payment. It's not just about paying for petrol or tolls in the car. How much time do you spend idly in the car? We're not even talking about an autonomous vehicle world, which is 3 steps away. Just think about how much time you spend that's idle in the vehicle now. Imagine if you could be productive. Imagine if you could use it as a marketplace. You could speak to a chatbot to start buying groceries for when you get home. You could start paying bills. All of a sudden, you've just created a new payments ecosystem that happens to be mobility. Wallets on wheels. And I think that's what we need people to start thinking about.
Yeah.
Because then you fundamentally change how you think about what you do. And then you democratize an entire new part of the economy.
Yeah.
Enabled by payments.
To sort of unpack the power piece a little bit for us then, because I think you say platforms, online, wallets, embedded, and real time. Yeah. So because this is almost this is a framework that you've kind of you've built around really what you think the aspiration of how payments can really impact the world, how they can eat the world. So just touch on that a little bit more for us. So with regards to sort of platforms, what do you mean by that? Sure,
we think about sort of vertical marketplaces in a way. You think about there were $36 trillion of payment flows across, the platforms in 2020, of which 32 trillion came from China alone through the super apps. I think super app is a value-added service on top of a platform, if you like. And I think it's important to make the distinction between how we think of value-added services, but platform being the sort of the mega theme, and then value-added services being the platform, the super app on top of that. Why it's important? For example, let's talk about platforms, right? Because I talked about platforms earlier. We've created these through connectivity. If you think about for most in the West, there isn't such an appreciation of the importance of a super app, particularly in China or in Asia more broadly. I, for one, want a simplified digital life. I think the average data point is that the average American has 80 apps on their phone. For whatever it's worth, I was bored on the plane after listening to the podcast. So I looked on my phone. I think it was 135.
Wow.
And by the way, the average American only uses 9 apps a day. I think I use, by the way, 9 apps just to get to London because of all the new travel rules, but put that aside. The average consumer has 150 passwords. 80% of consumers are worried about data privacy. I'm surprised. Well, I don't know what the other 20% are worried about. I'm surprised the number's so low.
Sure.
So point being is a simplified digital life by aggregating the noise into these sort of vertical platforms. The super app is coming to the West. You've already seen, like, I don't want to single out too many, but I would argue Nike is a really good example because it's a consumer good company that probably most people could relate to outside of financial services. They've got over 100 million dedicated loyal consumers in the US alone. I might be one of them. They've created this sticky ecosystem within their app where it's not only about just buying and selling shoes or clothes. There's a lifestyle component, there's an engagement component, there's an interactive component. What other services could they layer on top? But it starts with a payment.
Yeah.
You think about what some of the other verticals are doing with, especially now going direct to consumer, because when you control your channel, all of a sudden you don't need the marketplace. Now, another interesting data point is that in 2015, I think about 25% of all commerce in the US or e-commerce was through these marketplaces. Now it's about 60%. Now, the 60% who rely on the eBays, the Amazons of the world, that's going to cater for your small business through to some of your larger enterprises. But the super large enterprises have their own direct consumer channel and can create their own super app-like experience, which I think is really interesting. Again, without the payment, you couldn't do that.
Yeah.
The payment has unlocked that whole ecosystem, and it's coming to the West.
Yeah.
It's going to come to the UK. It's going to America, Australia, you name it. It's coming fast.
Yeah. Well, you touch on with the E in power, embedded.
Yeah.
And actually, I mean, embedded is sort of almost to your point on the stack. I mean, taking the solution to really where the problem is, isn't it? And we've seen, payments players do this so effectively in the last couple of years. I mean, Klarna is a brilliant example of that. Is like, actually, is there anything particularly innovative in the product? Not really, but like the problem is being solved by the solution right next to the problem. So you can do things amazing. PayPal, you say PayPal back in the day, the first wallet. I mean, what problem were they solving? They were solving, I can't find my wallet, so I'm going to use PayPal. And that's fine. Like if that is solving a real consumer need. But embedded finance, embedded payments is really like an explosion, isn't it?
Yeah, and I think Buy Now, Pay Later or BNPL is a great example. And a number of the big companies came out of it. I mean, Klarna came out of Sweden, but Afterpay came out of Australia. Following the space for some time before it really hit the US, I would argue that what's actually more interesting is on top of your point about embedding the payment method, at the point of sale to make it a delightful experience and a more efficient one for both merchant and consumer. I would argue there's a bigger kind of structural shift that's going on between there is a battle that's being fought for the new consumer. It's under 40s, which means older, middle, younger millennials, and then Gen Z, and whatever we're going to call the kids after Gen Z. There is a religious war that being fought between traditional credit card issuers and now merchants. The balance of power is shifting, powered by Buy Now, Pay Later and other, one-click checkout-like experiences, because the power is shifting to the merchant. There's a reason the merchants are paying a premium to embed BNPL-like experiences. It's not only for lower checkout abandonment rates and higher conversion and a better experience, because they're also embedding a better payment experience where they don't have to worry. They can worry about having good products, good service, and the payment's taking care of itself. But it's getting higher flow. But it also means the power is shifting from traditional credit to the merchant side. In addition, I think 85 to 90% of BNPL users in the US, it's linked to a debit card, right? So there's another shift away from traditional credit to debit. Low-cost payment method, cheaper, more reliable. You look at it's being fueled in part also with the 60 million gig workers in the US. I don't know what the numbers are in the UK, but the 60 million gig workers, you've got the creator economy. 2 million Americans last year filed a six-figure income by basically selling their own content on a phone. And again, you can only do that because you can get paid in real time.
Yeah.
So to me, these are structural shifts in the new economy.
Yeah.
And I think you get it, your listeners get it, your staff get it, your teams get it. I think the corporate world is starting to get it.
Yeah.
The question is, how quickly will they get it before it's too late?
It's interesting, isn't it? As you describe it, you touch on the real-time piece, which is obviously the end of it. But, it's like the modern day building blocks for a new financial services industry, isn't it? And actually, once you've got those payments capabilities and the Lego blocks to build above, then actually the things you can do, the platforms you say, the services 100%. As we call them at that top level, can just be so much better, can't they? That's where, when we've talked about things like digital riches, that's what we're trying to get to is almost, hey, if your point earlier on around the aspiration, often we see a big aspiration, but without the execution. And actually, it's interesting to sort of start. I feel like we're starting to get to that point in the industry where people are making big statements about change, but actually backing it up now, which is fantastic.
May I say, and when I first met you, you were given a keynote in New York, and I remember you said the 1% done. And I remember thinking, who is this bald guy? He's got an accent. It's not an Australian one. And I'm like, it's true. We're barely 1%. At that time, we were barely 1% as an industry, right? But even the way you demystified that, right? Because all these people in the audience at this big future financial services thing are probably thinking, oh, we've done a great job. We've done the transformation. Okay, let's get back, And you're like, no, 1% done. Barely started. And you see the reaction. And I thought that's the guy we need to be associated with. And so you think then through to whether it's Power Plus or Riches or whatever the case may be, to break down the building blocks for the new economy so that nobody has an excuse to hide behind the incumbency or hide behind the complacency and say, head in the sand, we can just move on. Because at the end of the day, we all share the same customers, whether they're incumbents or insurgents. The customer expectation has fundamentally changed. And the technology has created a level playing field. Technology also creates scale. And I think that's what's so exciting with our industry. And that's why we need to continue to have these sort of dialogues, because it gives a safe space for the incumbents to be vulnerable, and it gives a different access point for the insurgents to understand how to approach an incumbent, how to partner. It might not always be the right fit, but at least to know, because I think collectively as an industry, we all get better. Now, obviously in Europe with open banking, it's different in the US, so it's a different sort of playing field, if you like. But I think there is a harmonization in practical terms that's happening. There's a recognition, not only in the banking world, but I think broader corporate world of the role of fintech or tech within the stack. And I would just simply say to anyone in the corporate world out there who's new to the space is think about fintech as like the friendly front end. It's that last mile of distribution. And the customer doesn't care is it fintech X or company Y. At the end of the day, they just want a good, quick, cheap, reliable, safe service. Yeah. And that's how we all work together.
It's funny, isn't it? We, inside the industry, we get so obsessed with these things, but, customers just care about the outcome. And that's the thing, and that's why, a lot of the things with open banking, people are like, well, do people really understand open banking? And I'm like, no, and my mum is never going to understand open banking, but she doesn't understand how a combustion engine works either,
no one cares when they go on Google, when it auto-corrects, what was the technology behind that? Like, wow, I only typed in 3 letters and I got what I needed, to your point. And the other thing that's interesting is that, as we think about the role of the technology that's behind it, again, it's less important. It's just about the outcome. And now you're in this speed-driven world. So all the more reason to be partnering with those who can help accelerate you there faster. Because again, look at the shifts we've seen in the pandemic. When you've gone from a world that's been BAU, normal, physical and digital, but predominantly physical, to shutting down overnight to going full digital. When consumer behavior changes, and maybe you've used digital channels in whatever industry for the first time through necessity, then you use it the second time, the third, the fourth, the fifth, the umpteenth time, those behaviors aren't going to unform. They're not going to unchange. They become ubiquitous. And I think that's also will be interesting to see as we hopefully get out of this situation sooner than later, and the world can get back to being healthy, 1, and 2, being productive, and 3, being sort of prosperous, because we know there's going to be mental health issues that will last a very long time out of this. But assuming we can get those 3 things on the right track, is what industries will fundamentally change. And I think we're already seeing it in some aspects. But what industries will still be there? Because the new consumers, even look at the creator economy. Sorry to bring up Nike again, but the co-founder of Nike, Bill Bauman, the famous track coach, gave a famous quote that said, "If you have a body, you're an athlete." And I think I would sort of paraphrase that if you have a smartphone, you're a small business because nowadays you can monetize your content, connect it to YouTube or TikTok or Instagram or Snapchat and monetize it. I mean, the highest grossing TikToker was a 15-year-old girl in Connecticut, made $5 million last year. I mean, that's not bad coin.
Yeah.
And all through a smartphone. And these technologies, but again, you have to be able to get paid.
Yeah.
And in real time and low cost. And that's how payments have unlocked that new economy.
Yeah, it is amazing, isn't it? Like, and as you say, those brands, somebody like Nike. I think I've said it live on the podcast a bunch of times, but if anybody's listening from Nike, every day, yeah. If ever Nike build a bank and 11F, if ever they do that and 11FS didn't do it, I'm going to shut down the whole company because at that point it's over. But I know you got to make a flight, so we better wrap this up and kind of get going. But I mean, just before we sort of send off there, I mean, what's next for JPM in this space? Because I mean, you've put out this great report. I mean, there's always the pressure for that. It's like that tough second album now where you've got to kind of come up with in terms of like following this up and then it's, practical sense. Like say you guys are not a research house, you're a doing organization. So you guys are obviously putting a lot of these things into practice, right?
Yeah, we are. I mean, we just did something with Volkswagen Pay on the wallets on wheels analogy or the connected cars, as I mentioned, that's released about 2 months ago. Payments reading the world is our vision for the market. It's a very provocative, forward-thinking narrative. Part of my remit since coming on is to look at the world. We've already made one investment in Europe, as we just mentioned with VW. There might be others in 2022. We're very bullish on this part of the world in particular, not least of which outside of the US. I would simply say that a big thank you and shout out to my amazing co-author Neha, who's a rock star and was a lot of fun doing this together, and the rest of the marketing organization who supported us. But here's the really one thing I want to say. Our vision, our ambition is to be the world's most trusted global innovator in payments. That's what drives us every day for ourselves and for our clients. And being new to the organization that's 200 years old or 200 and something years old, it's day one. That's how we think about it in the payments business. It's day one.
Yeah. Because
our clients don't have time to mess around. They want real time. They want here and the now. They need global solutions. Payments is fragmented globally. There's a real opportunity for future collaboration, further investment between the incumbents and the insurgents. And that's what's exciting. And that's why we'll be back in this region a lot in 2022 and keep an eye on it.
That's super exciting. I mean, it sounds like you're not only going to be having loads of people reaching out to you for jobs, but potentially people to invest in their businesses at this stage as well. So expect yourself to be, I imagine, pretty much inundated. Fortunately, we're going to have to wrap up now, though. I mean, Jeremy, thank you much for dropping into the 11FS office. Where can people learn a little bit more about you? I mean, where can they pitch you for the investment opportunities as well?
Well, don't pitch, but get me on LinkedIn, Jeremy Balkin. I think there's only two of us. The other guy, I don't know who he is, but he lives in Houston and apparently he's a photographer. So the other guy would be me. But if you want to pitch, go to the other guy.
Fantastic.
Thank you.
Well, we'll drop a link to the report if you haven't seen it in the show notes for this one as well. But do take a look at that report. It is super duper good. As for me, you can always find me lurking predominantly on LinkedIn. Thank you so much for listening, everybody. If you like what you've heard, subscribe to this podcast. Don't forget to leave us a review. It really helps everybody to do it. While you're on your next plane trip, Jeremy, you can write us a review. As always, if you want to join the conversation, you can find us on pretty much every social media channel at this stage. Just search for 11FS or Fintech Insider, or if you really want to, email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.